Bitcoin just dropped, fear is taking over, and people are panicking. But what if I told you this could be the final shakeout before the biggest rally we've ever seen? Every cycle, history repeats itself. Short-term pain followed by explosive gains. And right now, all the signs are pointing toward a massive opportunity. Welcome to the Chainpoint channel. In this video, we'll break down why Bitcoin is dipping, the key support levels to watch, and how global conflicts and US economic policies could actually fuel the next bull run. The Federal Reserve, trade wars, and even bizarre market valuations like a Cheeto selling for $87,400. All of this is connected, and most people are missing the bigger picture. Let's get into it. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. Bitcoin has entered another bearish phase, a pattern we've seen before. Looking at past cycles, this isn't out of the ordinary. Bitcoin has always had moments of extreme volatility before rallying to new highs. The Moraz line indicator suggests a shift in trend, but the real question is this just another fake out before a major breakout? Historically, we've seen similar movements that shook weak hands before the market reversed. Key support levels to watch are in the $67,000, $70,000 range. If Bitcoin bounces here, we could see a recovery sooner rather than later. However, if sellers dominate, we might drop further to $56,000. An area with historical significance. This level acted as a crucial support in previous cycles, making it a prime zone where institutional buyers could step in. The question is, will history repeat itself, or will this time be different? Zooming out, Bitcoin's price movements are nothing new. In 2010, BTC was worth less than a cent, and over time it has surged by an insane 20 million%. Investors who survived past dips and held strong have always been rewarded. The biggest mistake? Selling too soon out of fear. The real winners understand that price volatility is part of the game. Bitcoin doesn't move in a straight line, and neither should your emotions. So, are we actually in trouble, or is this just the market shaking out the weak hands? Every cycle, Bitcoin faces skepticism, and yet it continues to dominate as the best performing asset. But there's something bigger at play. Beyond just charts and support levels. The real driver? Human emotion and market sentiment. Markets aren't just numbers and charts, they're reflections of human emotion. Fear, greed, euphoria, and panic all play a role in price movements. When prices are skyrocketing, everyone feels like a genius. But when the market turns red, fear takes over and many sell at the worst possible moment. Understanding this emotional cycle is key to long-term success in crypto. Right now, uncertainty is dominating the macroeconomic landscape. Inflation concerns, interest rate speculation, and global instability create a perfect storm of fear. And what happens when people are scared? They make impulsive decisions. Retail investors panic sell while institutions take advantage of the dip. It's the same pattern over and over again. Historically, moments of extreme fear have been the best buying opportunities. Think about 2020 when Bitcoin dropped to $3,800 before surging past $60,000, or even 2018 when BTC hit $3,200 before rallying again. The market is emotional, but data doesn't lie. Bitcoin has always come back stronger. The key is staying rational when everyone else is losing their minds. So the real question is, are you going to follow the herd, or are you going to think like a pro? Right now, fear is dominating, but those who recognize the cycle know what comes next. But before we jump to conclusions, let's talk about the bigger picture. Because Bitcoin isn't just reacting to emotions, it's moving within a world shaped by global conflicts and economic wars. Bitcoin doesn't exist in a vacuum, it thrives in times of uncertainty. And right now, the global economy is facing 5 major types of war that are reshaping financial markets. These conflicts create instability, and historically, Bitcoin has benefited as a hedge against chaos. Let's break them down. First, the technology wars. Nations are racing to dominate AI, quantum computing, and blockchain. The US and China are leading this battle, with both investing billions. The country that wins the tech war will control the future of digital finance, including Bitcoin regulation. Then there's the geopolitical influence war, where major economies compete for power. Whether it's the US versus China or Russia versus NATO, global tensions affect markets, and investors seek safe havens like Bitcoin. Next, we have the capital war. Nations are strategically manipulating money flows, investment policies, and trade agreements to gain economic power. Governments are restricting capital movements, and Bitcoin, as a decentralized asset, becomes even more valuable. On top of that, military conflicts continue to destabilize economies, pushing investors toward assets that governments can't control. Wars increase government spending, leading to inflation, a situation where Bitcoin historically shines. Finally, the trade war, which is directly impacting global markets. Tariffs, sanctions, and economic barriers are making international trade unpredictable. Trump's tariff strategy, for example, could reshape the global financial order. But how does this affect Bitcoin? If major economies weaken, central banks might print more money, inflating fiat currencies and driving investors toward Bitcoin as a hedge. And that leads us to the next major factor: the US economic strategy and how it could trigger the biggest Bitcoin bull run yet. Trade wars are back in the spotlight, and Trump's tariff strategy could have massive consequences for the global economy. And, surprisingly, for Bitcoin. The idea is simple. By taxing imports, the US puts pressure on economies like China, Canada, and Mexico. This forces them to negotiate better trade deals, strengthening the US economy in the long run. But there's a catch. Higher tariffs mean higher prices for imported goods, which could fuel inflation, and inflation is a tricky beast. It eats away at the value of fiat currency, making assets like Bitcoin more attractive. Historically, whenever inflation surges, Bitcoin benefits as a hedge against devaluation. But that's not all. If economic growth slows down due to trade restrictions, the Federal Reserve might step in. Here's where things get really interesting. If the Fed lowers interest rates to counteract a slowdown, the US dollar weakens. A weaker dollar means more liquidity in the market, and guess what? That liquidity often flows into risk assets like Bitcoin. We've seen this play out before. Every time the Fed prints more money or lowers rates, Bitcoin tends to benefit. This scenario is basically a modern-day Plaza Accord 2.0, where policies weaken the dollar to boost exports and economic competitiveness. If history repeats itself, we could see massive capital inflows into Bitcoin as investors seek a safe haven alternative to fiat. But is this enough to trigger the long-awaited bull run? Let's dive into how these economic shifts could set Bitcoin up for its biggest rally yet. Despite short-term uncertainty, history tells us one thing: Bitcoin thrives in times of economic instability. If the US dollar weakens due to trade wars and Federal Reserve interventions, risk assets like Bitcoin could see explosive growth. Why? Because when fiat currencies lose value, investors look for alternatives. And Bitcoin, with its fixed supply of 21 million coins, is the ultimate hedge against monetary debasement. Let's talk numbers. Over the last decade, Bitcoin has outperformed every major asset class. Its 230% annualized return crushes traditional investments like the Nasdaq 100, 14%, and even gold, 1.5%. Every time the market has doubted Bitcoin, it has come back stronger. And with increasing institutional adoption, the next bull run could be bigger than anything we've seen before. Another key factor: liquidity. When markets are flooded with cheap money, assets with high scarcity tend to skyrocket in value. We saw this in 2020 when central banks pumped liquidity into the system, Bitcoin followed by reaching new all-time highs. If another round of quantitative easing happens, Bitcoin could be one of the biggest beneficiaries. So, are we on the verge of a massive rally? The data suggests that Bitcoin is primed for another bull run, but market sentiment is still catching up. And speaking of sentiment, let's talk about the insane valuations we're seeing in markets right now. Because if people are willing to pay nearly $90K for a Cheeto, Bitcoin's price potential is far from being realized. Markets don't always make sense. Case in point, a Cheeto shaped like Charizard just sold for $87,400, which at the time was more than the price of a whole Bitcoin. Let that sink in. This isn't just a random internet joke. It's a perfect example of subjective value at play. While Bitcoin's often criticized for having no intrinsic value, the truth is, value is always based on perception. Let's break it down with another example. Imagine a signed baseball from a legendary player. To a hardcore baseball fan, this could be worth thousands of dollars. But to someone who doesn't follow the sport, it's just a ball. The materials used to make it aren't special, but the history, rarity, and emotional connection give it value. The same applies to Bitcoin. Some see it as the future of finance, while others dismiss it as hype. The key difference? Bitcoin has global demand and a fixed supply, unlike collectible sports memorabilia. This highlights a crucial point. Markets exist because people are willing to pay for things based on belief, utility, and scarcity. A rare Pokemon card, a luxury watch, or even a digital NFT can have massive value if there are buyers willing to pay the price. Bitcoin, however, isn't just another speculative asset. It's decentralized, borderless, and limited to 21 million coins. That's what makes it the hardest form of money ever created. So while people laugh at Bitcoin's volatility, they forget one thing. Price is just a reflection of market sentiment at a given moment. And if history has shown us anything, it's that Bitcoin's long-term trajectory only goes one way, up. Why is Bitcoin so dominant? Scarcity. Unlike stocks, which can be diluted by issuing more shares, or fiat currency, which governments can print at will, Bitcoin is capped at 21 million coins. This built-in scarcity makes it immune to inflation, something traditional markets can't claim. When central banks flood the economy with liquidity, traditional assets get devalued. Bitcoin, on the other hand, becomes more attractive. Another key factor, liquidity and accessibility. Unlike real estate or traditional investments that require intermediaries, Bitcoin can be bought, sold, and transferred instantly, anywhere in the world, 24/7, and this makes it a truly global asset, free from government restrictions and banking limitations. So, is this Bitcoin dip just another fake out before a massive rally? All signs suggest that we're repeating history. Short-term fear followed by a breakout that leaves doubters behind. With trade wars, inflation concerns, and Federal Reserve policies in play, Bitcoin is in prime position to thrive as a hedge against uncertainty. We've seen it before. Those who panic sell now will be the same ones buying back at much higher prices. The real winners? Those who stay ahead of the market, understand the cycles, and position themselves strategically. The data is clear. Bitcoin has outperformed every major asset over the last decade, and this cycle could be no different. But now I want to hear from you. Do you think Bitcoin will bounce back, or are we heading lower first? Drop your thoughts in the comments below. Let's get the discussion going. If you enjoyed this deep dive, hit that like button, subscribe, and turn on notifications so you never miss an update. More crypto insights coming your way every week. See you in the next video.